What's up, everybody? This is Jimmy with Trading Decoded, and we are going to talk about the magical day that SPY had today. In all seriousness, I am making this video because in our Discord today, I did see some people that were indicating that today was a rough day of trading SPY. Most of us had winning days, but some of us didn't, and so I took it upon myself to look at the chart, having played it already, and tried to go back and explain to them why today was a relatively easy day to trade SPY. So I'm going to show you guys the very same thing because I think that there's going to be helpful information for you in here. I'll start off by saying that today was another gap filling day. If you haven't watched the gap video, go ahead and click the card above. I will put it there. But if you have, you know that that's a very high probability move. And today was a perfect example of that. Not only did we fill the gap, but we had an uptrending day. And when you've got all of these factors that equate to higher probability chances of winning, to me, it becomes an easier trading day and not a harder one. So I'm going to show you what I'm talking about. This blue line is the start of today's trading day. This yellow line is the gap. As you can see, we dropped it open, and then we very quickly, 1, 2, 3, 4, 5, 6 minutes into the day, filled the gap. So that part of the strategy was done. That was an easy play. When was the proper time to get in to fill the gap? This is one of the things some of my people are struggling with because they have it in their minds that the gap fill is automatic. And even though there's a high probability chance of that happening, it doesn't mean it's going to happen with 100% certainty. So to buy a call, write it open, anticipating that gap to be filled, is foolish. Does it usually work out? Yes. Is that the smart trade? No. Why? Well, because any normal, sane person would have been stopped out of that call by the time we got down here at the 3rd minute of open being a red candle. If you held and hoped, it worked out for you. You got to fill the gap, whatever. However, what I was telling the people in my Discord is don't consider a call until we at least get above the opening, which happened to be at that particular time the high of day. And that is indicated by this blue line. So one would argue, well, if I get into my call down here, then I would have made more money on my way up to filling the gap. True. What made you think that a call was 100% going to work out? Buying it down here. Would you have known when to cut that call if it didn't work out? Sadly, most people don't. They will hold that call for whatever reason and for however long and just watch their money go away. If you happen to get into a call here at the bottom down here or on this green candle, the proper time for you to get out of that call would have been probably slightly below what was the low of the day at the time, just to give yourself a little bit of room in case it did come down and turn around. That being said, that's irrelevant at this point. So what I told my people was I would not and do not consider calls until we break the opening high of day. Why is that? Well, that's because the people that forced this drop are making money as long as we're below that point. if we manage to get up there and cross through it, this group of people become uncomfortable. They sell out of their position. They force SPY to move up because of that. Not only are they helping it move up, but momentum starts to take place, not to mention the fact that a lot of people are waiting for a candle close to happen above that high of day. So there's a lot of factors that go into making this the right trade and less risky. But here's the beauty of today. At this point, we don't know yet that it's an uptrending day. But very quickly we realize, because we're putting in higher highs, higher lows for quite a little bit of while on the way up. So here's how you play this. If you got into calls here, your stop to get out of them would be a little bit below that high, in my opinion. As you can see, had you gotten into calls here, we never came down to that to stop you out. So if you're in calls, you could have literally held them for the rest of the day and made a good amount of money. But if you have a target of 20%, 50%, 10%, whatever it is, you would have hit that along the way. But the question is, when do we get back in? How do we make another play? Today was not a put playing day. Could you have made some money using puts here and there? Yes, but nothing that was definitive enough to say this is a good idea. So how did I play it? I bought in here, just like I suggested we should. Okay. If you were to have gotten out up here, you happen to time the top of this high perfectly. Good on you. If you didn't, you still didn't get stopped out. You could have rode it up. I don't know when you would have gotten out, but if you did, when would you have gotten back in? Well, every time we put in a new high, if we waited, especially on an uptrending day, for confirmation of a break of that new high, and you were to buy calls, understanding that to be stopped out, you would give yourself a little bit of room and that this is your stop. You've gone into calls, you're in calls, you're in calls, you're in calls, you're in calls. And as you go up, you're creating new support lines. So every time we put in a new high, that should be your new stop loss, almost like a trailing stop. We put in a new high here. You're still in your calls. It's still running up. This becomes your trailing stop. So mind you, you're in back here. You're out here. Okay? So that becomes simple. But now you have a new high of day all the way up here. Now at this time, we don't know if that's going to be the last high of day. It could be the last high of day and we start trending down. So we don't get back into calls until we break through it again, which we do later in the day. Get a candle close above that high. This down here becomes your new support. And look, we stay above, we chop a lot, we never break through, get stopped out. We're in it, we're in it, we're in it, we're in it. Even if you held through all of this, you're still up because this was it ended up being a $5 move. So even if you didn't get stopped out down here, because we have our stop loss in place, and managed to ride it out, we closed the day at 450.24 at our high. That's an impressive move. It was a safe bet. At no point in time were you really losing any money. You came close every time we got down to this support, but still, you have to understand that when you go into a trade, there are going to be some possible risks of losing money. So you have to account for that when you're setting your stop losses and your targets. Long and short of it is, today was a very easy day to trade for me. And now that you look at it this way, I hope that you can see these same things. Not only did we have a trend and setting new highs all over the place, and just playing confirmation of the break of those highs, we also had some channels that we could have played. Okay? So again, we had some support here. Resistance, support, support, resistance, support, resistance. We break resistance. If we were playing channels, we were in calls already down here. We break through, we're holding our calls. You can cut out here. You can cut out when we get to here. You could ride it all the way out. Point being is I had guys and girls who were playing puts all over the place. And it baffled me because I was looking at this chart saying, what about today screamed puts to you? Look at the whole picture. Zoom out. This blue line's the start of the day. And if you have to draw a trend line throughout the day, you can do that. I mean, yeah, at some point we break the trend. But do we need a trend line to see that overall this was an uptrending day? I don't. I mean, even if you look at it, like this, sure, you could have got out there, but if you were getting in at the right points, you were never really down to begin with. Even if you held the original calls from all the way back here, you would have made a small fortune today. That's a big move. That's a real big move. But we got in here at 441.34 and we closed the day at 450. Come on now. That's money in the bank. So guys, point of this video is simple. Patience. Look for your moves. Wait for the moves to happen. Let the moves come to you. Don't chase them. We do not want to be at the mercy of the market. We want to stack all of the positive things that can make us profitable in our favor. Then we take the trades. Be picky. Take profits. Be smart. And you can do it. Don't rush into trades. Plan your trades. Know when you're going to get out. Know when you're going to get in. Know why you got in. Because when you know these things, you feel better about the trade and you'll have less nerves involved in the trade. If you're just randomly buying calls and puts, then you're going to be on edge. You're going to be trading with emotion. You're going to make stupid mistakes. You're going to make bad decisions, and it's going to cost you money. Play it smart. Read the chart, and you can make money all day long in SPY. This is going to be a short video. If you guys have any questions or comments, please leave them below this video in the description or in the comments section. I will leave a link to my Patreon and a link to our Discord in the description section. Please subscribe to the channel. We're trying to grow here. And if you have any suggestions for future videos, just shout them out to me and I will do my best to make one. Other than that, I hope you all have a good night and I will see you soon. See you.